Do you or someone you know have a bunch of student loans? Have you heard about income-based repayment plans? They have a huge effect on qualifying to buy a home. Student loans can be a deal breaker many times on qualifying for a mortgage. My name's Miles Pitcher. I'm the owner of Superior Lending here in Utah. I want to tell you today about these income-based repayment student loans. These are based on your income, and if you have federal student loan debt, you can apply for these income-based repayment plans. They take into account how much you're making, and if you're below certain thresholds, they will discount or show your monthly payment on these student loans at zero. This is a huge deal. I'm not going to tell you how to get those income-based repayment approvals because that's for you to figure out with your federal loan there, but we find a lot of clients have them. The beauty of it is that if you're in that plan and your payment is zero, there are certain loan programs where we can count that payment as zero. Other loan programs in the past have required us to take 0.5% or 1% of your student loan balance and count that towards your debt ratios. Many times this eliminates or stops someone from being able to qualify for a mortgage. A few of our loan programs that we deal with, VA, conventional, USDA, and FHA. The great thing is on VA and conventional, we can utilize this income-based repayment plan and exclude those payments, or if your payment's zero, out of your debt ratios. But however, in USDA and FHA, we have to count your student loans as part of your debt ratios. Even if you haven't started making payments on them yet, you're still in school, or you're just barely out of school, we have to count those in your debt ratios. The income-based repayment plan is awesome. Let me give you an example. And this just happened yesterday. I had a realtor call me up, kind of freaked out about their client. The client's name is Lindsay, and they had been told yes by their bank initially, and then they went out and got under contract on a home. But upon further diving in on their file, the bank came back and said, oh no, sorry, you have to do an FHA loan and you have these student loans, and that really threw their debt ratios out of whack. So the bank told them no. They came to us and we looked at things. We knew to ask the right questions, and we found out she was in an income-based repayment plan. We were able to help her not only boost her credit score up a few points to get a better rate, lower mortgage insurance, but we also were able to get her debt ratios where they're at. They are now going to be able to move forward, have no problem buying this condo that they are under contract to purchase. This is a powerful thing. Please be aware of it. Make sure you're talking with a loan officer who is aware of this and knows which loan programs the income-based repayments work on. A little bit on rates. This is as of March 10th, 2022. You can see the chart. It's an inverse chart. So as the chart moves down, rates are moving up. We have broken down through that resistance level at 100. We tested it a whole bunch of times a few weeks ago, but we have finally broke down through it. Why is this? It's because oil is a big deal right now. We are seeing the prices of oil skyrocket. This is the effects of inflation. And remember that inflation is the enemy of mortgage rates. So as inflation continues to exist and get worse, rates are going to get worse on us. We're watching closely with Russia and Ukraine what happens. Many times war is beneficial to mortgage rates, but right now the inflation is really hurting our rates. Rates are still fabulous. I will mention that you need to be aware that many times right now a jumbo loan is pricing better than our conventional loans. So just keep that in mind. I hope you guys have a great week. My name's Miles Pitcher. I'm the owner of Superior Lending. Please like and subscribe this channel if you can. It helps us out. Have a great week.